I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show, and today we are answering a question that we get a lot. Hey, Mortgage Brothers, what is an APR? How does a mortgage APR work?
How does an APR work? It's like, what does APR even stand for? Holy cow.
Right, APR. All these acronyms in this business, and I guess frankly in our daily lives, right? All these acronyms that we hear. Well, APR, a lot of people will hear it, especially on car advertisements for leases, and I would say car commercials probably use APR more than anything. You hear it. That's probably where you hear about it a lot.
Right.
No, 1.99 APR, 5.99 APR, whatever.
Right. No, those guys talking super fast too.
Yeah, that's right. So APR stands for annual percentage rate. And people who are asking this question about annual percentage rate, the APR, are generally they're maybe confused, right? They're wondering, what does the APR have to do with an actual interest rate? Is it the same thing? Is it different?
Let me add this. I think most of the buyers, the borrowers that ask for APR, they're going to be intelligent people. They're going to be people that have done research, and someone would have told them, buyer beware, ask about the APR. So it is actually something very good that you're doing, and it's good that you are researching it. But if you don't understand it totally, it could confuse you. So I think that was the reason for this podcast. We're not going to get super technical, but we're going to kind of give you the why. Why is there an APR? Why are we required to talk about the APR? And then maybe another podcast we can get into the nitty-gritty particulars on what makes up the APR. And if I can just do the framework, Ed, and then I think I'll have you kind of lead most of it. But again, if you're listening to this podcast, it's because you've probably done some research. Either online's telling you to ask about the APR, your aunt is telling you to ask about the APR, your dad is, and you're like, I don't know what an APR is, but I'm going to call up a mortgage broker and I'm going to ask what the APR is. Okay, so I guess for starters, the APR is supposed to be a kind of an all-in number that is going to help the consumer decide on which lender to go with. Because at the end of the day, if you're refinancing or purchasing and your grandpa tells you to ask the lender what the APR is, that's a way for you to have an apples-to-apples comparison. That's the theory. That's the purpose of the APR. But I think the reason why we're actually talking about this is because it can be deceiving and it can be misunderstood. So that's the framework. Yeah. APR is supposed to help people.
Yeah. Mm-hmm. Oh, that's right. Regulations was created to protect consumers, and the regulators, the government basically said decades ago, we have to have some way to kind of measure what the true costs of a loan are, and that's why they created this APR. So let's just talk. We're going to show this slide for those of you watching on YouTube. We're going to show this slide basically showing what an interest rate is. We're going to define an interest rate. A home's interest rate is expressed as a percentage of the principal loan amount that a mortgage lender charges on you, on your loan on an annual basis for borrowing your principal loan amount. Basically, it's the percentage of interest charged on an annual basis.
Mm-hmm. Yeah, that's going to be the ongoing rate that you pay throughout the life of the loan. You have one interest rate, and it will stay with you through the entire life of the loan.
Right. So every month, if you were to look at we call it an amortization schedule, it's like this is the interest charged on the remaining balance. It has nothing to do with fees at all. It has nothing to do with your loan closing costs or anything like that. Now, if we go to the APR, the APR has everything to do with the interest rate and the closing costs or parts of the closing costs. Basically, it's taking the interest rate and adding in a way like what is the impact of certain loan costs on top of the interest rate. Okay, so the interest rate has nothing to do with costs. APR is trying to show you a reflection of what those costs are.
Mm-hmm. Now, another way that lenders, I guess, used to be able to do it is you simply ask, hey, what's my interest rate I'm going to pay over 30 years or 15, and what are my loan costs?
Mm-hmm.
But as, lenders, and I guess the consumer started getting more technical and getting more advanced, and business was harder to get, some of the closing costs weren't always disclosed in a uniform basis. And so it was like, well, you asked me what the closing costs were, and then I told you, but that didn't include the appraisal. So I think what the APR was meant for, not I think, I know, it was, listen, whatever you call the closing costs, it's all supposed to be in there. And that's how you, the consumer,
Yeah.
can kind of get rid of all the noise and be able to compare APR to APR for the lenders. The problem is that what we're talking about, not every lender, and it doesn't have to be intentional, some lenders may
Yeah.
include certain things in the APR and may not. It's supposed to be
Yeah.
regulated and all supposed to be in there, but we've found that that's not always the case.
That's exactly right. So there are certain costs. Not all costs are included in the calculation for APR, so you want to be careful. And so that's a warning. It doesn't mean the APR is bad, but in order to compare apples to apples, every lender has to be doing it exactly the same. And generally, so we're going to get into that a little bit more here quick in this podcast, but let's just show this next slide, which is how closing costs and interest rates are affected by the APR, or how the closing costs affect APR. As a general rule, interest rates and APRs have an inverse relationship. A low closing cost or no closing cost loan will have a lower APR. I mean, that goes without saying, but we're going to say it, right? If you have no closing costs at all, your interest rate and your APR should be the same. So the next bullet point is when paying loan closing costs, including paying points for lowering your interest rate, you're going to have a higher APR. Okay, so there's inverse relationship. Mm-hmm. The next one is basically saying, are you getting a good deal? Because you're probably watching this podcast, like we said in the beginning, because you're kind of comparing, like, well, I've got this loan quote over here, and I got another loan quote over here. Which one's better?
Okay, so in a perfect world where all lenders are using the exact same variables in their APR, that should be a true apples to apples comparison. And so
Correct.
If one lender is 0.001 higher, that should be a true depiction. The problem is all it takes is one thing to be missing for that to be not correct. So I think one of the things that we were wanting to advise our borrowers is the other way to ask it is what is my interest rate? Okay, and what you'd want to do is get that exact same interest rate for all lenders, and then simply go to those lenders and say, what are my total closing costs? I had to throw in the word total twice, because what it does is it tells my borrowers that there's nothing else. Like, those are all the closing costs. That's what an APR is supposed to do, but if lenders aren't doing it correct, that's how you would ask it otherwise. What's my interest rate?
Yeah.
And what are my total closing costs, and stack them up side by side.
Absolutely. So that's the best way to do the comparison, for sure. So I think if you take away anything, that's the number one thing to take away from this podcast is if when you're comparing, do exactly that. Compare the costs with the rate and have it in, just to be double sure. Okay, so let's just kind of finish off. Let's just show an example. One of the slides shows loan A versus loan B, just to kind of show you how the rates are affected just visually. If just like loan A is basically saying if an interest rate is at 3.25%, I believe this is on a $300,000 loan, but if the interest rate's at 3.25, there's 0 points, 0 fees. I mean, just imagine like there's no fees at all from anybody. Your APR would be 3.25%.
It would match exactly what your interest rate
naturally
is.
Yeah. Now in this slide, there's loan B. Now let's say loan B has an interest rate of 2.875, and let's say if you added up all the costs, right, all the real lender fees, they were $3,750. So 1.25 points. Let's say the lender says, okay, total points are 1.25. That will affect your APR calculation. Your APR should be about 2.973. Okay. So the interest is calculated at 2.875, but the APR is 2.973. This is going to give you an idea.
Yeah, so it basically went up about 0.1%. And the APRs typically are never that much higher. They're very close. And if loan costs are low enough, sometimes people think the APR is even wrong because it doesn't seem that much higher. You know, I'm not going to sit here and guess, but they can be close. Those numbers can be close, so don't worry. Again, you just want to really get that apples to apples comparison and making sure that every lender has the same things built into that APR.
Yep. Okay, so let's we're going to finish off just concluding that the APRs and interest rates, our slide says they can be manipulated. They can be intentionally manipulated. That is true, but it can be accidentally, done as well. A bank software can be giving you an estimate that could be wrong.
Yeah,
so definitely double check.
Also, with a lot of the regulations can change. Not week to week, but maybe quarter to quarter or semi-annually, and there are just lots of changes.
Our last slide is here. The key point we want to make is to truly determine the lender's cost of the loan, or in other words, your closing costs, to see if you're getting a good deal or not. Focus on the lender's fees, not the rate. Okay, so I think that's the big takeaway, which we've said over and over. So,
and also, I think maybe lastly, what I'd say is to remember with the APR, the majority of it, and I'm going to say this slowly, is trying to take into account the costs of the loan, not some of the other costs you might have for prepaids. So, and again, when we have a different podcast, we can get into the details, but it's really supposed to talk about the true costs. But every refi comes with prepaids or impounds. And so that is usually a separate thing, that we're not talking about some of the impounds, but just the costs. So,
yeah, and we Tom and I were thinking about whether or not we should go through the whole list of certain fees that are going to be included in the APR calculation. That is not important right now because it'll confuse everybody. But when your lender sends you a worksheet, they will be able to show you which fees are actually calculated in that. And you will notice that the prepaids and such, that you'll see the fees that are included and are not. But we just wanted to make sure to let you know. We did wonder whether or not we should go over it right now. Yeah. We're just not going to go into it.
Right. All right. Well, hopefully you found this helpful.
Yeah. And if you are looking to buy a house, refinance, you have questions, be sure to ask the Mortgage Brothers. We'll be sure to help you. If you like what we're doing here with the podcast, be sure to click the like button, the thumbs up, and do a comment if you can. All right, everybody. Have a good rest of your week.
All right. Thanks a lot, folks.
Hey, guys. Thanks for listening to the Mortgage Brothers podcast. Please let us know if you have any questions you'd like us to answer. You can email your questions to team@azmortgagebrothers.com. And be sure to ask us for a free quote on your next mortgage. We'll be sure to give you personalized service and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.